They find you through a recruiter, not a government recruiter, not a defense contractor. A normal recruiter named Sandra, who works out of an office in Midtown and specializes in placing financial professionals in, as she describes it, unique organizational environments. She calls you on a Tuesday. She says she has a client. She says the client requires a CPA with top-level security clearance, experience in nonprofit tax structure, familiarity with international asset management, and, she pauses here in a way that suggests she is reading directly from a brief, a high tolerance for ambiguity. You ask what the organization does. She pauses again. She says, they save the world. You think she means this metaphorically. She does not mean it metaphorically. You take the meeting. The meeting is in a building that does not appear on any public record you can find, which you find before the meeting because you are an accountant. And due diligence is not a professional habit. It is a personality trait. The man who meets you is named Coulson. He has the specific energy of someone who has explained things to skeptical people many times and has developed a very efficient system for doing so. He tells you about the organization. He tells you about the team. He slides a folder across the table. You open the folder. You close the folder. You open it again. Because you are a professional, and professionals look at the information in front of them, regardless of what the information contains. You look at the information. The information contains, among other things, a photograph of a man who is green and approximately 9 feet tall. A photograph of a man in a suit of armor that costs more than the GDP of several nations. A photograph of a man who appears to be holding a hammer in a way that suggests the hammer is not casual. And the photograph of a woman whose file classification level you cannot read, because it is redacted to a degree that suggests the classification level itself is classified. You look at Coulson. He looks at you with the expression of a man who has shown this folder to several people before you and is waiting to see which category you fall into. You ask about the benefits package. He smiles for the first time. You start on a Monday. The first thing you do is request the previous fiscal year's financial records. This takes 3 weeks because the previous fiscal year's financial records are distributed across 11 different entities, 4 of which are registered in jurisdictions that have complicated relationships with standard accounting practices, 2 of which appear to have been created specifically to purchase items that could not be purchased through normal channels, and 1 of which is technically registered as a religious organization in a country that no longer exists. You spend the first month just building the chart of accounts. The chart of accounts has a category called incident response. Incident response has subcategories. The subcategories include vehicle replacement, structural repair, civilian settlement, legal defense, international incident management, and a line item called miscellaneous other that is the largest single line item in the entire budget and has been entered as a lump sum every quarter for 3 years with no supporting documentation. You send a memo requesting documentation for miscellaneous other. Nobody responds to the memo for 11 days. On the 12th day, a very large man with long hair and what appears to be a small lightning bolt tattooed behind his ear walks into your office, sits down in the chair across from your desk, and explains that miscellaneous other covers expenses that are, he pauses here, searching for the word, realm adjacent. You ask him to define realm adjacent. He thinks about this for a moment. He says, sometimes things happen in other places, and those places are not always places that have invoices. You look at him. He looks at you with an expression of genuine apology that you find, despite everything, completely sincere. You create a new subcategory called realm-adjacent expenses. You request that all future realm-adjacent expenses be submitted with whatever documentation is available, including, you add carefully, descriptions of the realm in question and an estimated conversion rate for any currency involved. He says he will do his best. You say, that is all any of us can do. He seems to find this genuinely comforting. You did not intend it to be comforting. You intended it to be a professional statement about documentation standards, but you will take it. The second problem is the man in the suit. The suit costs, by your calculation of its component materials, manufacturing complexity, and integrated systems, approximately $1.6 billion per unit. There are currently 4 suits in active rotation and 11 in various states of development or repair. The development costs for the suits are expensed through a technology company that is publicly traded, which creates significant accounting complications, because the suits are both a corporate R&D expense and a personal asset, and also, technically, a weapon, which has its own tax treatment depending on which jurisdiction you are filing in. You schedule a meeting with the man in the suit to discuss the tax treatment of the suits. He arrives 20 minutes late. He is eating a cheeseburger. He looks at the document you have prepared. He says, just expense it. You explain that just expense it is not a tax strategy. He says, I own the company. Expense it to the company. You explain that expensing a personal weapon system to a publicly traded company creates fiduciary liability for the board of directors. He looks at you. He says, do you know how many times I have saved this planet? You say, that is not a line item I can use on a tax return. He stares at you. You stare back. You have been stared at by auditors from 3 different federal agencies. You are not going to be outstared by a man eating a cheeseburger. He blinks first. He says, what do you need? You hand him a 14-page document. He looks at the document. He looks at you. He says, I'll have my people look at it. You say, you will sign it by Friday, or I file for an extension. He signs it on Thursday. You note this in your records as a victory. The third problem is the big green one, not the man himself. The man is, in your experience, one of the most straightforward people on the team. He does not expense realm-adjacent items. He does not have a publicly traded company creating fiduciary complications. He does not arrive late to meetings eating a cheeseburger. The problem is the trousers. Every time the transformation happens, the trousers are destroyed. This is a predictable recurring expense. The issue is that the trousers are not standard trousers. They are made from a material developed by a university laboratory under a contract that is itself classified, which means the procurement cannot go through normal purchasing channels, which means every pair of trousers is a sole source contract requiring individual authorization from 3 different people, 2 of whom are never in the same building at the same time. You have spent more time on trouser procurement than any other single line item in the budget. You raise this in the quarterly review. The room is quiet for a moment. Then the big green one, who is currently the quiet version, and is sitting at the end of the table in a very large chair that facilities ordered specially and expensed to general equipment, which you are going to need to address separately, says, I appreciate you taking it seriously. You say, it is 11% of the discretionary budget. The room is quiet again. The fourth problem is the travel. The team travels, frequently, to places that do not have commercial airline service, or any airline service, or, in several documented cases, airports, or, in 2 cases you have found in the records, conventional geography. The travel is expensed through a combination of the organization's private aircraft, borrowed military transport, and a category in the chart of accounts called alternative transit that you have come to understand means anything involving the hammer or the suit flying under their own power. Alternative transit cannot be expensed because it has no fuel cost, no maintenance record, and no flight plan filed with any aviation authority on the planet. You have a meeting with legal about alternative transit. Legal says it is a gray area. You say all the areas are gray areas. Legal says, welcome to the organization. You say, I have been here 8 months. Legal says, we know. You say, is it always like this? Legal pauses. Legal says, it is actually better than it used to be. You go back to your office. You sit at your desk. You look at the chart of accounts. You look at the miscellaneous other line item, which you have now renamed Realm Adjacent Expenses, and which has already exceeded last year's total with 4 months remaining in the fiscal year. You think about the recruiter named Sandra. You think about unique organizational environments. You think about high tolerance for ambiguity. You open a new spreadsheet. The spreadsheet is for next year's budget. You have decided to approach next year's budget differently. Instead of starting from last year's actuals and projecting forward, you are going to start from first principles. First principle 1. The world will need saving approximately 4 to 6 times per fiscal year, based on the 3-year average. First principle 2. Each world-saving event generates between 40 and 300 line items, depending on whether it involves portals. First principle 3. Portals always cost more than initially projected. You add a portal contingency of 30% to the total budget. You have learned this the hard way. First principle 4, someone will lose the receipts. Not all the receipts, but enough receipts that you need a no-receipt policy with a per diem structure that accounts for the fact that some of these people do not use money in the conventional sense. And one of them technically predates the concept of currency by several centuries. You add a line called currency conversion and historical rate adjustment. You sit with this for a moment. You add a 30% contingency to that too. Your phone buzzes. It is an alert from the monitoring system. There is an incident in Midtown, 3 blocks from the office. You can hear it now that you are listening. A distant sound that has become, over 8 months, recognizable. You get up. You close the blinds. You sit back down. You open a new tab on your computer. You go to the real-time property damage assessment tool you built in month 3. You watch the numbers update. Structural, vehicular, infrastructure, civilian settlement estimate, legal exposure. The numbers climb. You start a new incident file. You give it a date and a location and a preliminary cost estimate. You add 30% for the portal contingency. Even though you do not yet know if there is a portal, there is usually a portal. Your colleague from 2 offices down knocks on your door. He is new, started 6 weeks ago. He is still in the stage where incidents make him want to look out the window. He asks if you are going to watch. You point at your screen. You tell him you are watching. He looks at the spreadsheet. He looks at the numbers climbing in real time. He looks at you. He says, does it get easier? You think about this honestly. You say, the paperwork gets faster. You say, you develop systems. You say, by month 4, you stop flinching at the portal contingency. He says, that is not really what I asked. You look at him. You say, go watch if you need to watch. You say, there will be paperwork when it is over. You say, there is always paperwork when it is over. You say, that is what we are here for. He goes to watch. You stay at your desk. Outside, 3 blocks away, the world is being saved again. The numbers on your screen keep climbing. You keep working. This is, you have come to understand, the actual shape of extraordinary things. Not the moment of saving, the before and the after, the procurement and the settlement, the chart of accounts, and the portal contingency, and the 11% of the discretionary budget that is trousers. Someone has to count the cost of saving the world. It turns out that someone is you. You add another line to the spreadsheet. You label it miscellaneous heroism. You give it a very large budget. You have learned that miscellaneous heroism always costs more than you think, and it is always, in the final accounting, worth it. But you are still going to need the receipts. This story is inspired by the world of the Avengers, but the person at the center of it is not fictional. Every extraordinary organization in history, every movement, every mission, everything that changed the world, ran on the work of people whose job was not the extraordinary thing. It was the infrastructure around the extraordinary thing, the logistics, the paperwork, the budget, the person who stayed at the desk while the world was being saved 3 blocks away, and made sure there was something left to come back to. They did not get a credits sequence either. They got a very complicated chart of accounts. If this one stayed with you, drop a comment, subscribe. The next story is already waiting.